Hello, very good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here again. Very good morning. Today will be Tuesday, the 23rd of April, 2024. So before we start our Daily Dose of Market Insights, let's quickly take a look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook for today on the cross assets, let's have a recap of what has taken shape yesterday and as well as early today's Asia session in terms of market performance and as well as releases of key economic data or event. So let's start with the performance of the cross assets. So yesterday we do have a kind of a counter trend rebound, or I will say that optimism bounce on the major US stock indices in light of not much new catalyst that is being flared out from the Middle East region. That means there's no, we call it a shocking geopolitical risk premium uptick. And the US major stock indices managed to actually inch up higher across the board. So if you look at my screen over here very quickly. All right, so all the major US indices managed to stage rally between 0.7% to 1%, with the top performer coming in at the Nasdaq 100 gaining close to 1%. Okay, so the reason the rally is actually being centered on kind of a buying the dips mentality coming back into the markets ahead of key earnings result releases this week. All right, so let me share with you the heat map of the S&P 500 so that you could actually see very clearly where the rally actually is being centered on. So very clearly the rally is being centered on the mega cap 7 stocks, with the top performer Nvidia gaining by a positive 4% after its disastrous 10% drop on last Friday. Amazon adding 1.5%, Apple 0.51%, Microsoft around 0.5%, Google 1.4%, and Meta almost unchanged plus 0.14%, and Tesla is actually the worst performer among the mega cap 7 stocks, but nevertheless down negative 3.4% due to the fact of firm specific negative news flow, where as those who actually followed Tesla, the top management, which is Elon Musk himself, has decided to actually announce a rapid we call it sales price cut to their models, to their EV models, and also he himself trying to actually push for a new product line called Robo Taxi, so that could actually cannibalize its current EV suite. All right, product suite. All right, so that actually explain the ongoing negative feedback loop in Tesla share. But do not forget, Tesla right now is only actually its market cap has dropped significantly down. It's no longer the top 5 market cap stock inside the S&P 500 and the Nasdaq 100. So that actually explain why it has a lower significant impact on the movement of both the SPX 500 and the Nasdaq 100. So, and I did mention earlier on that why the other mega cap stocks rallied, especially Google, as well as Microsoft, because they're actually reporting earnings report this coming week. All right, so this coming week we do have a slew of earnings releases. 4 of the mega cap 7. Tesla will report earnings today after the close of the market, then thereafter followed by Google, Meta, and Microsoft, which I will cover their respective dates and earnings per share expectation later. Okay, so now another thing I want to highlight over here is given the fact that due to the lack of geopolitical risk premium uptick, gold prices fall within our expectation. So those who actually follow our daily dose of market insights since last week, we do expect gold price to do a bit of consolidation below that 2004 2020 level for that counter trend retracement decline move. So the move actually came in with expectation. So early in today's Asia session, it managed to hit the second support level at 2,300, and thereafter I'll share with you what will be the next technical short-term technical outlook to look out for, or in terms of element. And also what's interesting is oil prices actually didn't fall as much as gold. So it seems to me that whatever happened in gold right now is more or less related to positioning, intraday positioning by speculators that's causing this whipsaw movement on the downside. Whereas for gold price, yes, even though it traded slightly lower yesterday, but it managed to help firmly at the 50-day moving average, which is slightly below the support level, slightly above the support level that we highlighted yesterday at 80.80. So still bearing in mind that for gold yesterday, we do have a short-term bearish bias, so it's almost hit the 80.80 level. Okay, so I'll highlight the short-term technical outlook for gold shortly. So for pretty much an unexciting in the FX space, where the dollar continue to move sideways, and the dollar yen continue also, the strength of the dollar yen continue to struggle below the 155 psychological level in the past 3 days, all right, in the past 3 sessions. So now what's up in terms of the economic data releases? So from a long-term perspective, the Japan economy seems to be in a firm footing to support a major uptrend move in terms of their local stock market, which is the Nikkei 225. Why? Because a leading economic indicator like the flash PMI data for Japan, so this is a survey-based PMI data. So okay, let me highlight my screen to you to expand my screen, pardon me. So it's up earlier today's morning at 8:30 p.m. Singapore time. So the manufacturing data managed to turn around right now. Previously, it was in contractionary mode at 48.2%, and it came in at almost the 50% expansionary mode level at 49.9, give or take, but way above consensus of 48. So if you look at the trend of the flash manufacturing PMI for April in Japan, okay, this is the highest level. 49.9 is the highest level since in the last 10 months. Okay, so if highest level since May 2023. So if you look at the 5-year trend, there's actually a big uptick. All right, so it seems to us that is in line of a kind of a bottoming manufacturing a situation in Japan. Also potentially beneficiaring from what I call reshoring. We call it initiative that is led by US, where high-tech supply that is being channeled away from less friendly nation like China towards Japan, that is manufacturing from this as well. And most importantly, the services sector in Japan that has been getting much more significant in the last 5 years over manufacturing. So services continue to be in expansionary mode, way above forecast at 54, slightly above forecast at 54, but continue to expand from previous month of 54.1. From a flash perspective, April figure came in at 54.6. What do you mean by flash? This is actually preliminary findings compiled by Mikit. Mikit is the compiler for the global PMI data from the services manufacturing. So before the last before the last week of the month, somewhere around the third week of the month, they will actually releases flash preliminary data for this month. Okay, so this is a flash one. So the final result will come out 2 weeks later from now. All right. So if you look at the flash services PMI trend, over here, it's been trending pretty healthy above 50, the expansionary mode. So you look at the 5-year trend, it's been in a gentle, robust uptrend. So indicating to us, number one, the services sector, which has a more significant, we call it concentration in the Japanese economy, is in a robust footing. Manufacturing has started to have a significant turnaround from a contractionary mode in the last 3 to 4 months. So that actually supports the ongoing long-term major uptrend of the Nikkei 225. So our strategy is long-term. Short term, we need to look at other technical factors like overbought and oversold and its intercorrelation with other markets like the S&P 500. Thus, S&P 500 or the Nasdaq 100 still has further downside potential from a short-term perspective. All right, so other economic data releases, if you look at it over here, there's none so far. So that's pretty much sum up in terms of the news flow and economic data releases, and in terms of yesterday's market cross asset performance that I'll share with you. Now let's jump straight into the short-term technical outlook. So let us start with the FX market first. So over here, the FX market on the euro dollar continue to trade sideways, pretty much unexciting. So still holding below the 1.0725 short-term pivotal resistance level. So we do have that short-term bearish bias as long as 0.725 didn't surpass to the upside, which is now very close to the downward sloping 20-day moving average. We will still maintain that short-term bearish bias on the euro dollar. First support level to watch will be last week low at 1.06 level. Okay, unless 1.06 level is taken out, then we potentially could expose to the next near-term support at 1.0525, which is also the lower limit of the minor descending channel that I drew from the high of 28th of December. Okay, it's a medium-term descending channel lower limit, and as well as a cluster of Fibo extension level. Okay, corresponding to the minor swing low of 18th of October, 26th of October, and 2nd of November. All right, which is the next support level at 1.0525 if 1.06 is taken out on the downside. However, if we have an hourly close above 1.0725, then this short-term bearish bias will be invalidated to potentially see a squeeze up for the next near-term resistance to come in at 1.0780 and potentially 1.0820, which also confluence with the 50-day and the 200-day moving average. All right. Okay, so let me expand my screen so that you guys could see better. Okay, so for the sterling dollar, yesterday we do expect a bounce, but the bounce didn't actually take shape and it immediately plunges straight towards the support level at 123 figure before shaping a bounce during the US session, and now it's traded sideways. So overall, there's no clear signs of a bearish exhaustion because the RSI didn't shape a bullish divergence. Why? Because you see that price action going to go lower low, RSI also shipping lower low. All right, so with that, I'll be using very close to this former minor swing low area of 16th of April and 17th April that has been taken out turns into a pullback resistance. So any potential minor bounce that's been surpassed 1.2410, we will flip to a bearish bias on the sterling dollar. First support level to watch will be yesterday's minor swing low at 123 figure. A break below it exposes 12215 level. So 12215 level is the 1.382 Fibo extension that I drew from the high of 8th of March, and as well as it confluence with this graphical minor swing low area of 10th of November. Okay, only an hourly close back above 1.2410 will invalidate this short-term bearish bias for today to potentially see a much more forceful counter trend rebound scenario to take shape again for the next resistance to come in at 12480 followed by 12520 level. Okay, so what's 12420 and 12580? Minor swing high of 17th of April and 18th of April. And if we do the Fibo retracement, if we do the Fibo retracement of the last push down from the high of 10th of April all the way down to yesterday's minor swing low, it also corresponds to the 50% Fibo retracement at 1.2520 very closely. All right. Now, Asia Pacific currency, Aussie dollar. So Aussie dollar, yesterday we do expect a bounce up over here, and the bounce continue to actually play out over here. And right now it's actually testing the first resistance again at 64.60. Okay, so no change. Still continue to expect the potential minor counter trend rebound. Now with I will actually be more we call it in terms of a risk management perspective, I will tighten the key short-term pivotal support level to maintain this potential short-term counter trend rebound scenario back towards close to 64.25, which is yesterday's Monday US session low. All right, and also confluence with the former minor swing high of last Friday down turns into a pullback support level. All right, very clearly here, this congestion level here managed to bounce off during tested and rebounded off during yesterday's US session. So 64.25 tighten short-term pivotal support level to maintain this potential residual push up for that minor counter trend rebound scenario to play out. Next resistance after 64.60 will be 64.90, which correspond to the downward sloping 20-day moving average as well. only an hourly close back below 64.20 will invalidate this potential short-term minor counter-trend rebound scenario to revive back the bearish tone. Next near-term support level to watch will be at 64 figure, followed by 63.55. So 63.55 is very close to last Friday's swing low, and as well as the major ascending trend line support level in gray that confluence with 63.55 as well, that I drew from the low of 13th of October 2022. Okay, then what's in store for the dollar yen over here? Okay, so dollar yen continue to be sideways congested in a very sideways tight range in the last 3 days, okay, or three session. All right, since last Friday, pardon me, not last week, since last Friday. So no change, right? First support level to watch will be at 154.30, 154.38 over here, or 154.40, which is very close to yesterday's minor bump down before trying to inch up slightly higher. But I don't want to target so tightly. So this will be the first support level. So the key support level, the pivotal support still remains unchanged, which is the V-shaped bounce on last Friday morning at 153.90 over here. So as long as any potential slight didn't surpass below 153.90, that will be the key short-term pivotal support level. Next resistance level to watch in terms of it, Fibo extension level one time will be 155.2010, followed by 155.70. However, only an hourly close below 153.90 will invalidate this bullish bias on the dollar yen to potentially kickstart a much more pronounced corrective declines, minor corrective decline scenario. Next support level 153.30, followed by 152.70, which confluence with the upward sloping 20-day moving average, and as well as the minor swing low area of 11th of April and 12th of April. All right, so still no change of the dollar yen because it still continue to trade within this minor ascending channel since the high of 5th of April. Low that I drew over here still indicate to us that the minor uptrend still remains intact above 153.90 short-term pivotal support level. Okay, so now pretty much mix on the FX space. So what we could see over here is dollar strength for the major FX pairs, except for the Aussie dollar, who could potentially do a bit of residual push up before that bearish force reassert on the Aussie dollar pair. Okay, now in terms of the major stock indices, let us start with the Nikkei 225 first. So the Nikkei 225 yesterday returned neutral, so it actually hit back bound down toward the lower neutrality range over here. Okay, so it's back below this level again. Okay, so what we could see is yesterday's price action managed to reject off close to the lower upper limit of this more steeper minor descending channel that I drew from the high of 12th of April. So with that, I'll be using 38,175. So yesterday potential bounce move has been more or less over here. Why? Because of the RSI. If you look at the RSI, it has actually broken down below a key parallel ascending trendline support level that I drew after the bounce off from the oversold region. So indicating to us some form of bearish, short-term bearish momentum has started to creep back into the Japan 225 or the Nikkei 225. So with that, using 38,175 as a short-term pivotal resistance for today, I don't know tie it so tightly at this current minor swing high over here. Okay, which is at 37,850. Okay, 37. So I'll put it slightly higher, 37,175. As long as today's 38,175 didn't surpass the upside, flip to a short-term bearish bias on the Japan 225. First support level to watch will be this yesterday's Asia session low at 37,070. A breakdown below it exposes 36,650, which is close to Friday minor session swing low, but also most importantly is all confluence with the major ascending trend line support level, this dark gray line that I drew from the low of 4th of October 2023. Only an hourly close back above the 38,175 short-term pivotal resistance will invalidate the short-term bearish bias for today on the Japan 225 to potentially see the extent the start of a minor counter trend rebound. Next resistance level to watch will be at 38,640, 38,800. A break above it exposes 39,390, which is also confluence with the 20-day moving average. And if we do the Fibo retracement of that entire current down move from its all-time high of 22nd of March all the way to last Friday low, it corresponds to the golden ratio of 61.8 as well for the 39,390 level. Okay, so now Hang Seng. So Hang Seng over here, or the Hong Kong 33 managed to pierce above the 20-day moving average, which was yesterday's short-term pivotal resistance level. It pierced above it, and what you see right now over here is coming back towards the top of this very range high resistance again at 16,850, 16,000, 17,000 psychological level. So if you were to look at this situation over here, given the last this rebound, if you do the Fibo retracement, okay, it's actually now resting at the golden ratio at 61.8%, and also the RSI managed to hit at the extreme overbought level, not extreme but at the overbought region as well. All right, so with that I will it's pretty mixed right now, so I will actually turn neutral right now between this psychological level of 17,000 level, which is close slightly above the golden ratio, which is the 76.4% Fibo retracement of this last push down from 10th of April to last Friday minus swing low, that's 19th of April. So I'll use the psychological level over here at 17,000, close to it. Okay, 17,000. Okay, so this will be the upper limit of the neutrality range. Sorry about that. Let me highlight it. Okay, 17,000. Then the lower limit will be the okay over here. So it will be today's Asia session low, which is also the 20-day moving average. Okay, I think it's a support level, 16,600. Okay. Okay, yeah, that's today's Asia session. Today's close to today's Asia session low as well. Okay, 16,600. Okay, so neutral between 16,600 and 17,000 for the Hong Kong 33 index. All right, so because in terms of the reward risk ratio is not that fantastic, if you were to play the bounce back towards close to the what's at the 61.8% Fibo retracement, okay, and also the 76.4%. Okay, so I'll be potentially to see whether there's any signs of bearish reversal candlestick coming very close to the 17,000 upper limit of that neutrality zone. Okay, that were highlighted for the Hong Kong 33 for today. Okay, now in terms of the European currency, German 30. So German 30, right, yesterday we were neutral. It broke above the neutrality upper neutrality limit at 17,950. So right now what we are seeing right now is potentially shaping that counter trend rebound to actually retrace the previous we call it down move from its all-time high of 2nd of April all the way down to last Friday swing low. Okay, so 61.8% will be at 18,210 level. Okay, so with that, right, we'll be using yesterday's yesterday's European session low, which also I don't put it so tight at 17,950 just in case of any whipsaw, and also the yesterday's European session low also confluence with the 250-day moving average also acting as a support level at 17,840. So as long as 17,840 holds in any potential minor dip or level, flip to a bias for a flip to a potential minor counter trend rebound scenario. Next resistance to watch will be at 18,210, followed by 18,310. All right, over here. Okay, only an hourly close below 17,840 will invalidate this potential minor counter trend rebound scenario to kind of revive the bearish tone to expose last Friday minor swing low area at 17,550. Okay, now what's next for the US indices? So the Nasdaq 100 yesterday kind of trade, yes, even though it bounced, but after it bounced, it didn't surpass the Titan resistance level at short-term pivotal resistance level at 17,390. So no change. We will actually still use 17,390 as my short-term pivotal resistance level to maintain the short-term bearish bias level, short-term bearish bias. Next near-term support to look out for will be at 16,000. Will be at last Friday swing low area. Let me highlight. That was tested yesterday, 17,030. A break below it exposes 16,900. Only an hourly close back above 17,390 will invalidate this short-term bearish bias on the Nasdaq 100 to potentially kickstart a minor counter trend rebound scenario. Next resistance will be at 17,500, followed by 17,690 next. All right. So if we do the Fibo retracement of this last push down from 12th of April all the way down towards the last Friday low is actually the 38% and the 50% Fibo retracement as well. That's 17,500 and 17,690. Okay. Now, the US Wall Street 30 or the Dow Jones Industrial Average. So what you could see is a bit of whipsaw here at the 38,340 short-term pivotal resistance that we highlighted yesterday. So a kind of a whipsaw at this point in time before coming back down. So what I could see over here is that it managed to reintegrate back down below the minor descending channel upper limit that I drew from the high of 5th of April. So a bit of whipsaw over here. So what I could do over here is that I will actually use this level here. Okay, so let me remove this. Okay, so this level 38,590, slightly that's my short-term pivot for today. Okay, so this will be my short-term pivotal resistance. So as long as this level didn't surpass, then the next support level to watch out for will be at 38,020, followed by 37,690. Okay, these two level over here. So still maintain that short-term bearish bias on the US Wall Street 30, given the fact that during the last hour of yesterday's US session, it managed to reintegrate back below the upper limit of the minor descending channel. Only an hourly close back above 38,590 will invalidate this short-term bearish bias to potentially see the extension of this minor counter trend rebound for the next resistance to come in at 38,930, which is the minor swing high area of 8th of April and 10th of April. Okay, so now that's pretty much sum up for the major stock indices. So what's interesting in gold, spot gold over here? So for spot gold, we do highlight of that counter trend, we call it decline scenario. So it play out as expected. So right now, it actually come close to the 23,000 level with the RSI at a extreme oversold level on the hourly. All right. Okay, so I'll be using 2300 level, 2300 as my short-term pivotal support level, potentially flip to a bullish bias on spot gold XAU/USD. First resistance to watch out for will be at 2365, okay, which was this former minor swing low, broke down, turns into a pullback resistance. Above it exposes 2,420. Only an hourly close below 2,300 will invalidate this short-term bullish bias to see the continuation of this minor counter trend decline scenario to expose the next support level at 2,260, followed by 2,235, which is the minor swing low area of 1st of April. Okay, then for WTI crude oil, West Texas oil. So West Texas oil, it actually came down, print a lower low on yesterday's European session. at 81.37, which is very close to 80.80, our support level that we mentioned. But what's interesting over here that thereafter it managed to help right exactly at the 50-day moving average. And what you could see over here is that price action shaped a lower low, all right, lower low, but the RSI managed to shape a higher low. So indicating to us there's a kind of easing of short-term downside momentum. All right, so I do not want to put it so tightly at this level here. Okay, which is at 81.37. So I still use 80.80. So what's 80.80 is the very clear congestion area of 4th of March and 26th of March over here. Pretty much clear, tested, bounce, this clear congestion area. So 80.80 short-term pivotal support level flip back to a bullish bias on West Texas oil. First resistance to watch should be at 84.40, which correspond to the 20-day moving average as well. Above it exposes 86.35, which is the minor swing high of 16th of April and 19th of April. Only an hourly close back below 80.80 will evaluate this potential bullish recovery scenario to expose the next support area at 78.80, 78.40, all right, on West Texas oil. Okay, so with that, that sums up for the short-term technical outlook across the board. Let us take a look at the economic calendar. What are the things to look out for? So in terms of the economic calendar, today will be also flash PMI day for the Eurozone economy. So for the Eurozone flash PMI will be out later at 4 p.m. Singapore time, both for the manufacturing and the services, something to look out for. So for the services, for the manufacturing, market is still expecting a contractionary mode in Eurozone at 46.10. And for the services, slightly lower as well, slightly higher at 51.8. Okay, so for the manufacturing, slightly higher at 46.5, but still in contractionary mode. Okay, so let's say if it comes in within concession for the Eurozone, very likely that could actually continue to pay up the basis or bias for an ECB interest rate cut to come in as early as June this year, as being guided by the top ECB policymakers in the last 1.5 weeks or so. Then thereafter, UK will also see the release of their flash PMI data as well for both manufacturing and services at 4:30 p.m. Singapore time. Then heading into the US session at 9:45 p.m. Singapore time, we'll see the releases of US manufacturing and services PMI flash data. And towards the end of the US session, there's nothing much there because this week is a blackout week for Federal Reserve officials, so they are not allowed to speak before because the next 1 week or so we'll see the May FOMC meeting, which is very likely that the Fed will continue to stand pat as well without cutting the interest rate. And in terms of earnings results, I want to highlight to you also earnings results. All right, so for earnings over at the US session at the close today, we'll start to see the release of Tesla. So Tesla markets are expecting a very low EPS number of 0.49%, a decline from 0.8 previously, but this earnings per share, but very high hopes, right, on Wednesday, where we start to see the release of Meta, Facebook. So a very strong earnings growth of more than, I think, 100%, because previously it was 2.2 earnings per share. Right now, a market is actually expecting 4.32. Okay, so that's for Wednesday. And on Thursday, we will have Microsoft and Alphabet, which is Google. Also, for Microsoft, slightly not that high, but still above previous earnings per share at 2.45. Market expecting 2.82. Alphabet also higher, 1.51, previously 1.17. So that's actually explain why the US stock market actually rebounded yesterday, because of this anticipation of better than expected earnings results from these top 3 market cap stocks, which is part of the Magnificent Seven: Microsoft, Apple, and as well as Meta. So since the bar is very high, any risk of any weaker number than expected or any lackluster earnings guidance that could actually see a negative price reaction feedback loop coming into the picture as well. But we will take things one step at a time, since the the Nasdaq 100 is still below that short-term pivotal resistance that we highlighted earlier. So we will still indicate that the short-term bearish trend is still pretty much intact right now. Okay, so with that, thank you for your time. That sums up for today's daily dose of market insights. So I wish you a great day ahead, and we shall speak again tomorrow. Thank you.